Hi, I'm Eric Poulin.
And I'm Robin Poulin.
We're the co-founders of Calendar Budget, and welcome to the Calendar Budget podcast.
I can pay cash, I can pay check, I can pay wire transfer, I can pay gift card, I can pay credit, I can pay anything you like. I can pay cash, I can pay check, I can pay wire transfer, I can pay gift card, I can pay credit, I can pay anything you like.
Okay, we are back to talk about debt and credit cards. Very serious topic for serious podcast by very serious people.
Debt is at an all-time high.
It is actually. We're going to start with a stat that I just looked up. According to a 2020 study done by Experian, whomever they are, the average American carries $92,727 in consumer debt.
Wow. That's over 10 times the amount that we recorded in our book Power Spending that was 14 years ago. So in 14 years, 10 times, it's gone up just over 10 times the amount.
Well, yeah, keep in mind that inflation makes the numbers bigger as well, but
10 times the amount?
And that's before the pandemic.
Wow.
Actually, as it turns out, I had a look, the pandemic actually reduced credit card debt a little bit. And increased savings some, which surprised me. I thought it would have made it worse, but I guess people got scared into like saving and living in a bit of a crunch.
And they really couldn't go anywhere to spend money, so...
Well, tell that to Amazon. I don't think people spent on home improvements quite a bit, right?
That's true.
And Uber Eats and delivery services for food and
Just not traveling as much.
Well, you mean not traveling at all?
Yeah.
You couldn't
there
travel.
There were the occasional people that had to travel still, but...
Yeah, I mean, almost everybody was on lockdown for quite a long time.
Yeah.
But somehow the overall consumer debt well, I don't know about overall consumer debt, but credit card debt specifically declined some. And I think people were just nervous. They knew we were in a crisis, and people tend to conserve a little bit when that's the case.
Or buy extra toilet paper.
if it's available, yeah.
Yeah. But the one line, though, is debt is at an all-time high. That just kind of keeps coming on and on every year, every decade, or whatever.
That's because it just always... Some of that is just playing with stats. It's propaganda, yeah. Okay, it's at an all-time high based on the integer amount, but that's because inflation is always going to make numbers bigger over time.
Of course. Now, wouldn't that be fantastic if debt was at an all-time low, considering inflation and people being wiser with their money?
I don't think that's going to happen.
It's possible.
Unless everybody listens to this podcast and applies the principles therein. No, the problem is we're going to talk about today with credit cards and debt that it's very alluring, and a lot of people get into it without really knowing how to handle it properly, especially at young ages, and then that habit propagates through adulthood because financial education just isn't around. It's not very prolific.
Yeah, people start to treat it like it's their money, like they're owed that money, that it is theirs, that they earned it, but that it is not earned money.
Yeah, they treat it like earned money, that's for sure. So we've talked about this in some previous podcasts, so we're not going to just belabor the point, but the point about debt is borrowing money that's not yours, and the best kind of debt is no debt.
Yes.
We're going to talk in a minute here about good debt versus bad debt, but overall, the best kind of debt is no debt whatsoever. And I mean, that's not realistic because we have debt for a reason. People borrow money so that they can get stuff before they have the cash, which is nice if you do it the right way and for the right reasons. And we're going to talk about some of those things. But for example, if we all waited before we could to buy a house until we had all the money to pay for the house, especially with the way housing prices just went where they're in a bubble like over the past 4 or 5 months, right?
Yep.
If we all had to wait until we could save up $1 million for a home, then we'd be living with our parents until we were 50. It's just not realistic. And maybe not even then. We would just never leave the nest. That doesn't make anybody happy. Parents, kids, nobody's happy. So there are some good reasons to take on debt. and we're going to get into those. So we may as well do that right now. So what's the difference between good and bad debt?
Well, good debt would be anything that accumulates in value.
Right. We usually use the word appreciates. Yeah. I appreciate you. Is that the same thing?
I love you too. But no. Appreciates is maybe that a house, you typically, when you buy the house, it's usually at a lower price. And over time, it usually gains in value.
Yeah, that's the whole concept, is that it gets more valuable with time.
But there still is a risk that you could hit a recession or something like that.
Yeah.
Or where you get stuck in this recent period where people were selling their houses high, but at that same time, you need to move into a house. So what's the new house like? Hopefully that's less than what you sold your previous house at.
Yeah.
To allow you to pay off any debt.
Yeah, so that's the point, though. The good debt is something that gets better over time, or it becomes more valuable with time, or it has future value. That's the point of it. And those great examples of that are a home, obviously. In almost all cases, a house gets more valuable over time, even though it's being lived in and run down. Just real estate, that's just how it goes. It just gets more valuable.
There was one time I saw my sister, actually. She managed to make this work very well for her. She found a house that was being sold power of sale because whatever reason, the previous owner had some issues, couldn't pay some debt, and lost the house. So that house needed to be sold at a fraction of the cost in order to cover the expenses that need to be covered.
Yeah, so just power of sale is typically done when somebody declares bankruptcy. The bank takes over the home because they own it, in most cases because of a mortgage. And then they're just like selling it for whatever they can get quickly.
Yep.
Yeah.
But then you possibly run into issues with the house that needs to be taken care of. So you need to be aware of what the real costs are when you purchase this.
Actually, I was just working with a real estate agent a couple of weeks ago.
Cool.
And he said that what they recommend for people that are selling a house, that they budget 10% of the cost of the home for fixing things up and
refurbishing,
doing
maintenance.
anything like that to increase the value of the home. 10% seems pretty high to me.
Okay.
But that's just a kind of a rough number that they use. Because of course, even though a home appreciates over time, doing some touch-up work will make a huge difference on on the value of the home, right?
Like if you didn't have a finished basement in the first place, you put a finished basement in it?
Sure, something like that. But I mean, we all know
like
that
that.
even staging a home can make it worth way more.
Oh, yeah.
Anyway, I think we've got off track.
Yeah.
So home ownership for sure is an appreciative thing.
Education.
Education is something that gets better over time. It makes you a better person and therefore makes you more saleable as an employee. You're more likely to get a good job, so that contributes to future income. Other things like business investments, if you're investing in your own business as an entrepreneur or even somebody else's business, as long as you're careful about it. Again, there's risks with all of these things. You could spend a lot of money on an education.
In my case, I did.
And then never use it.
Yeah. Well, not exactly didn't use it, but at the
Didn't use it
beginning,
for earning money.
It looked like it at the beginning that it wasn't going to be used in that way because we decided that I would be able to have the luxury to be able to stay home and help with the kids and while you were at work. So of course you'd help when you got home. But I thought at first, I'm like, this sucks. I have to pay back my student loan, and I felt really bad for that. And then I realized, looking at it a little bit more at a bigger picture, that education meant more than what just the education was. I could understand what your job was since our education was the same course, and I could be able to bounce things off you, or you could bounce things off me, really. I could help testing things, and also just the confidence you gain from having an education and being able to be an example to your kids, saying that education provides you something for your future.
Yeah, I mean,
and now we can work together with my
certainly education. There's value in an education beyond its money-making capability. It makes you a better employee. It makes you get better jobs that pay more. But beyond that, obviously, there's lots of value to it.
Yeah.
Just as a human being, as an adult, being well-read, lots of value there. But it definitely has statistical, measurable improvement on your lifetime income.
Yes.
People who have completed high school versus not high school. People who have completed college versus not college. People who have done like a master's degree or a doctorate. Typically, you're going to earn more and more and more as you go up in the education scale. There's exceptions, of course. People that start their own businesses are outside of that track.
They find their own route.
They find their own route, and sometimes they can just go like a unicorn, which is the term for companies that just go crazy high. Almost all of the self-made millionaires are entrepreneurs. But it's a risk. It's super risky because most businesses fail still.
There could be opportunities for other people in their professions to have other education through online and things like that could help them, and not cost them. That could help.
Sure. Yeah, there's lots of ways to get an education. You don't have to pay for all of it, but if you are taking out a loan, the purpose of this conversation is when you're incurring debt. So for education, that would be a student loan or buying a course or paying some kind of money for an education. That money, even though you have to borrow it because you don't have it when you're young, is going to pay off in the long run, almost always. But again, there are risks. Like you said, a home could depreciate in a bubble. It does happen sometimes. Sometimes interest rates go up unexpectedly, and you can get into trouble. Yeah. Businesses fail all the time. So these things are not without risks. But in general, those things are good examples of good debt. Keeping in mind that the best kind of debt is no debt at all. But when it's necessary, those are some examples of when you can not frown upon it, I suppose is a good way to say it.
So then what's bad debt?
So bad debt is just anything that doesn't fall into that category. But more broadly, it's anything that depreciates or is a consumable. So some examples of that would be like electronics. You buy your phone from Apple, and then the next day, it's not worth what you bought it at Apple. If you tried to sell it, you can't sell it for the same amount, right?
Yep. Groceries.
Anything that you consume or you finish using before you've finished paying for it, that's a consumable. Like a restaurant, for example, right? You finish the meal before you leave the restaurant, and you have this. If you pay for that on a credit card, then probably bad debt.
Usually is.
Yeah. So we're going to talk about that. That's actually a terrible example because paying with a credit card can be fine under the conditions that we'll talk about later, but
it's bad debt if it remains as debt.
Yes, if you're using it as debt, then it's not a good idea.
Yes.
Yeah. So anything that's consumable, that's used up, groceries would be good examples of that. Clothing, another good example.
Yeah.
Vacation, yeah, anything that you can't afford that isn't going to better your life, not because it's more enjoyable, but anything that's not going to better your life by increasing your assets, financially speaking.
Yeah.
Bad debt, yeah. Now, there are a few examples of good bad debt, if I'm going to use a weird play on words here. So we used an example, I don't think we did, but I think we said a car is a bad debt in general because it's the same idea as a phone, right? You buy it brand new, as soon as you drive away, it's not worth what you just paid for it. You could never resell it for what you just paid for it, unless it's a rare condition, right? In general, that's not going to work out so well because that's bad debt. But there's some cases where getting a car is good. For example, if you're using a car to drive to a better job, right? If I have job A that's right next to me that only pays this much, and job B that I have to drive 45 minutes to and makes me this much, then that bad debt for the car, as long as the
difference.
As long as the increase that I'm getting is going to more than compensate for that bad debt,
Yes.
then that's kind of a good bad debt. So you have to balance these things. It's not like a clear delineation. There's individual cases, but you do want to be careful. Again, the best debt is no debt at all. I don't know if I mentioned that.
I concur.
Yeah.
I agree completely.
Okay, so normally we do debt through a number of vehicles or a number of ways. The most common way, of course, is probably through a credit card.
Yep.
And a lot of people don't even think of that as debt, but that's the most common form of debt. Otherwise, it's like a loan, line of credit. These
Mortgage. Yep.
are a mortgage, a student loan, a car loan. These are all things that are forms of debt. Usually there's a bank involved. If it's a large amount like a mortgage or a car loan or a student loan, there's a bank involved because somebody's loaning that money.
And each come with their different interest rate. So
Yeah.
if you're going to purchase a car on credit card, that would be a terrible idea. In the other case, use a car loan instead. It would have a much better interest rate.
Yes.
So
Yeah, all of these things are going to be, they have their places, and you do have to do some research, and you need some life experience before you just jump into the world of debt. If you're 12 years old, don't just go out and, first of all, you wouldn't be able to, because you
have to be the age of accountability.
You have no credit score, and you can't speak for yourself. You need to be an adult to get debt. But it pays to build the experience, research these things, become familiar with them, know when is better to get a loan, when should I get a mortgage, when should I do some of these other things, as opposed to getting a credit card. Because the credit card is probably, other than a loan shark, probably the worst in terms of the interest rate, right?
How do you figure out what to do, though? Who do you talk to? If I go to the bank, we went to the bank when we wanted to buy a house.
Yeah.
They said, sure, we pre-approve you for $220,000. But then we looked at our own budget and we said, there's no way we're going up to $220,000. We decided to go with $160,000 because we knew our circumstances would change in the future as our family grew.
Yeah, but you still need to talk to a bank.
Yeah,
which
you need to get the
was
loan.
your original question.
But how to make the decision, though, to which form is the best kind of loan or debt?
Well, that's what I'm saying. It pays to get experience with these things by, just looking into them and researching and figuring it out.
Financial advisor would probably be a good place to start.
Good place to start. But banks, they play both sides of the coin, right? They're there to serve you, but they're also
They like
there
to help too.
They're also there to serve themselves.
Yeah.
If you get a good banker that's there to help you, they're just going to use the vehicles available to them to help.
Yes.
But at the end of the day, banks are trying to make money too. So they're only going to be able to offer you what's available to them. Like, what does the bank have available? Well, the bank doesn't have everything that's available, right? You can get private loans from family. If you're a business, not that we're not going to go into business topics here, but there's other ways to get financing as a business that doesn't involve a bank, venture capitalists and so forth. But even as a private person, you can use family for loans. Otherwise, you're probably going to a bank.
And we've always said, though, which do you want more if you're going to borrow from family or friends? Do you want the money or the friend? Because if a difficulty comes up, it could put a lot of strain on the relationship.
Yeah, for sure. Yeah, well, in general, I don't recommend it. Having loaned money to people before, there's a reason people need to borrow money because they don't have it, which doesn't do well for them paying it back. But you know what? If you're going to loan money to somebody, then just assume you're never going to get it back and be okay with that. And if you get it back, awesome. If you don't, okay. You're a nice person. Make sure you're in a good position to be able to do that.
Consult your budget first.
Yeah, exactly. So, credit cards are the most common way that debt is used these days because it's so readily available. Almost anybody will get approved for it. And then in most cases, you use it once and then you're hooked on it for life because you never ever pay it down to zero. So we're here to bust that myth and help you not be in that group. 60% of people, by the way, are not paying down their credit card debt every month. So that's when I mean most people, it's 60%. But that means there's 40% of people that do pay it down. That's actually quite a bit.
That's awesome.
It's more than I thought. But the stats are, they're not bad.
Can make a difference that'll go down to 50 or 40% the opposite way.
Yeah. And so why are credit cards so alluring? What's so amazing about them?
They're easily accessible for money that you don't have yet. But there's benefits as well. Why you would use a credit card.
Yeah, basically, when you get approved to a credit card, every time you use it, so you charge something on your credit card. This is the motion of swiping it through a machine, just in case you're wondering why I'm clawing at you in the air. Now it's just tapping, so use your phone to tap. But the point is, you're using money that you don't have. Mm-hmm. You're borrowing money from the bank for this transaction, and then at some point, you have to pay this back. That's the whole way credit cards work. Now, if you pay this money back, so almost all credit cards have this idea of a grace period. And that's not that you're saying a prayer to them, like a grace before dinner. The grace period means you can use the money borrowed from the bank, usually for 30 days. Maybe there's different negotiations that can happen, but I think it's almost standard that it's 30 days. Mm-hmm. You can use that money for 30 days, and if you pay it back within 30 days, they don't charge you anything for it.
No interest.
They're just like free borrowing of money, mm-hmm. which is great. If you're using your credit card like that, 40% of people do, that's the way we want you to be. Then you're using your credit card in an effective way, and that's perfectly fine. You're essentially using it as if it were cash, just because it's more convenient than a credit card.
So like we said earlier, we go out for dinner, we pay on the credit card.
Yeah.
When we get home, that gets paid off.
Yeah, I mean, we don't...
Or within a couple of weeks.
We don't do it immediately when we get home, but as long as you do it within that grace period, totally fine. Mm-hmm. And there's reasons why using a credit card is better than a debit card, because you can do the same thing with a debit card. You can just pay. It's convenient the same way, mm-hmm. except credit cards are way more convenient because you can pay for things online with a credit card. In most cases, you cannot do that with a debit card. Mm-hmm. Certainly you cannot for any international transaction. Your debit card simply will not work. In fact, I don't know if we've tried going to another country and trying to use your debit card. No, this is not going to work.
And even the credit card, you need to try to work things through sometimes. Sometimes you get stuck, then you have to give a call and say, oh, it's just me.
Yeah. Better to call the credit card company ahead of time and let them know where you're traveling so that they don't flag a transaction as fraudulent while you're trying to buy gas and then hold your family up for 3 hours.
But there's some benefits that come, guarantees when you purchase on credit card, that it's can be guaranteed or protected against fraud.
That's right. That's in my opinion, the main benefit of using a credit card. Mm-hmm. The convenience is there, yes, but it's the same as a debit card in terms of convenience. International, yeah, for sure. That's the only way to do it unless you're like an insane person and use cash. But international payments work great on a credit card, but that fraud prevention or fraud coverage, I guess is the way to phrase it, is really only available on credit cards. Yeah,
on debit cards, it takes a lot more to go through all the hoops and possibly still be stuck with.
Yeah, so scenario, a transaction shows up on your bank statement mm-hmm. that you didn't make. Mm-hmm. So somebody has done identity theft, stolen your credit card, your bank account number or whatever. Somehow they've managed to do a transaction in your name that you didn't expect. Mm-hmm. On a credit card, you just call the company up and say, I didn't do this transaction. They'll ask you some questions about it and they'll do their due diligence to verify it. because usually it's done like in a foreign country, or they can track it and figure out that it was fraudulent. But if that was done on a debit card, you're responsible for that, and that coverage isn't there. That protection is not in place, and so
there's a lot more hoops I find when it gets done on a debit card, and possibly still might not have a resolution.
You may not be able to recoup that money.
Yeah, it's
terrible. It's terrible that kind of fraud happens in the first place.
Yeah.
But not being able to recover it, like our daughter just had this happen. And it was her debit card.
Debit.
Thank goodness she had a Visa debit card, so if it's a Visa debit or a debit MasterCard, if it has that like Visa or MasterCard logo on the debit card itself, then it has the exact same protections as a credit card.
Okay.
And so that fraud protection was there. She had a bunch of fraudulent transactions show up. She was out the day it happened, and so she wasn't able to notice and call it in until later in the day, and so several of these transactions happened. And she was panicking. She was in tears because
devastated.
She's 19, working as a nurse, clinical extern at the hospital, and she's 12-hour shifts, and it's the first time she's had that much income before with a steady job.
Yeah.
And she's working hard for this income. It's very challenging to see that money disappear because of fraud. So, yeah.
So, one thing I think could help actually is to use prepaid credit cards. That you have a guarantee as well, that you have that fraud protection, and you have a limit on that card. So you don't have to run into the idea of overspending on your credit card.
Yeah, so what happens when you try to spend more than you have?
That's it. You're stuck. You have to quit. That's your spending limit.
Yeah, it just won't get approved.
Yep.
Basically the same as a Visa debit card or a debit MasterCard. That money has to be there for you to use it. It's a different scenario. It's not like a true credit card where when you do the transaction, you're borrowing money from the bank. That's not how it works. Those ones, you're using money that you have already got in place. You put on the card or you have in your account.
Yes.
And you're just putting it through that mechanism. Yeah, so that's a good way to work things if you're getting started or if you've had problems in the past.
Or if you need a credit card to be able to purchase things online, and that way you can limit the amount that's going to be spent so it's not actual credit itself. It's still your money on a prepaid card. So
yeah, if you've had trouble with your finances in the past, then that's a good way to kind of tighten your seatbelt and put some restrictions in place. It's that artificial environment of scarcity, where you're just making sure that you're being careful about it.
Yep.
Yeah. So we recommend, of course, that you pay that balance off whenever you use a credit card. Pay it off within that grace period every time. In fact, we have a system. This was recommended actually as a business practice in a book called Profit First by Mike Michalowicz, great author. He recommends that he just puts it on a reminder on his calendar. Pay off the credit cards on the 10th of the month and the 25th of the month. So you do it twice a month. Because you're doing it twice, you're never going to miss an overlap of that 30-day grace period problem. And just twice a month, pay off the entire balance of your credit card. And then you're good to go. So that's what works for us. I know other people do it a little bit differently. So we have a friend who pays it off. He does pay it off every month, but he pays off the credit card statement amount. That's the tracked grace period amount.
Okay.
So as long as you pay that off in full.
And not the minimum payment, but the actual full statement
Never
amount.
the entire amount, not the minimum. Yes, of course. So what happens when you pay the minimum?
you will end up paying out a lot more money in the long run, and it'll take you many years to pay it down instead, depending on how much debt you incurred in the first place.
Yeah, so to put a scenario in place, if I have $1,000 balance on my credit card and my minimum payment is only $80, when I pay that $80, it comes off of that 1,000, but then the remaining amount, I have $920 that I still owe, the bank is adding interest to this every month. And depending on how much your balance is, sometimes that minimum amount is the same as the interest, and you're never getting ahead. You're just paying money to the bank every month, and it seems like you can never pay it off. Now, I don't think that's the reality of the situation. The minimum amount will eventually pay it off, but it can take 10 years. It could take a really, really long time, and you could end up paying twice the amount that you borrowed by paying these minimum payments.
Yep.
So don't do that.
It's just not worth it.
Pay the full statement amount. So the full statement amount would leave any transactions that happened recently still there because they're still in the grace period.
Yep.
And then, when the next 30-day window comes, pay that amount. In fact, a lot of banks now allow you to set up your credit card to just pay the amount automatically. You can set that up. Now, we don't do that. We just go in and pay. We pay everything, including the pending items, because we're like...
We know that's coming. Just get it done.
We're a little bit... I don't know what the word is. We're not panicky about it, but we're just like, I want to clear my debts with the world.
Nothing.
The world. I like the feeling of just not owing anything to anybody. So we clean off everything, even the pending stuff.
We budget for it, so it's planned.
Another question is, why do we even have pending things there? So the reason that there's pending things there when a credit card is being used, the business who's accepting that money or is charging you. So let's say I go to a restaurant and I use my credit card to pay. Mm-hmm. There's actually two things happening when I use that credit card. There's something called an authorization, which is where the restaurant checks my bank account and reserves the amount of money in my account is that money there? Is it available? Yes. Then it reserves that amount of money. That's now pending. And then there's a second part of this transaction called the capture, which is where they take that reserved amount and they capture it into their bank account.
Receive it. Mm-hmm.
Now you don't have that money anymore. The restaurant has it.
Okay.
Now, a lot of businesses, when a restaurant does that, the authorization and capture, they'll happen at the same time. Mm-hmm. Always. Not always, but most of the time.
Often.
But some businesses, it doesn't work like that.
2 or 3 days?
For many businesses, when you buy something, especially online, you buy something, the bank authorizes it and that amount is reserved in your account and you can't use it anymore until that reserved is lifted. Mm-hmm. So if you, just as a scenario, if you had $1,000 limit on your credit card and you already had a $500 balance, so you got $500 left, let's say you buy something for $490 and it's authorized but not captured yet, you can't buy anything else unless it's less than $10 because that amount is actually reserved in your account for this other merchant.
Okay, makes sense.
And then when they capture it, then they actually take that money. But sometimes they're not going to do that. Sometimes they reserve the money. For example, when we went to Washington, D.C., and we used those scooters, the electric scooters, to drive around the Washington Monument and everything, they would do like an authorization for $50 or whatever it was. This is like a reservation fee that's refundable. Mm-hmm. So they authorize that amount, and then after 5 days, when they verify that you didn't steal the event or steal the scooter or damage it in any way, mm-hmm. then they release the authorization, and then those funds are back yours and they're not reserved anymore.
Right.
So that's how that happens. A lot of companies, like when you buy online, they authorize the transaction and they're not allowed to capture it until they ship it out the door.
Okay.
And so sometimes you'll see on your transaction statement these pending transactions. Those are all things that have been authorized but not captured yet. And sometimes the companies can't capture the amount until they deliver the service.
Okay.
So that's where pending things come. Sometimes it's just mistakes. Happens quite a bit.
And there's
Yeah.
different types of cards that you can get as well. You have your bank Visa card or MasterCard, but then you can also get some from the big department stores that usually have a higher interest rate than the one you get from the bank.
Yeah. Why?
Yeah, why?
Because they can, of course.
And has their name on it.
And us as fools, if we don't look at it, we'll just be like, sure, I'll have your credit card.
Sometimes they give a guarantee, though. If you get this credit card right now, you'll get a discount on this purchase right now. So
Yeah, you got to be wary of introductory rates. They look really good, but they usually are only there for 6 months, something like that. Mm-hmm. And then you may have a low interest rate like 1.99% APR, annual percent rate. But and then after 6 months, it goes up to 23%. Read the fine print.
Meanwhile, on your regular bank Visa or MasterCard, a lot lower percent. So
I mean, even your bank one will be high.
Still high.
It's going to be like
15 to 18%.
15 to 18% is pretty typical.
Yeah.
You can get some better ones, but again, if you're getting better one, make sure that that's not just an introductory rate, because that's how they kind of lure you in. And you look at the introductory rate and think that's just the rate. Mm-hmm. No. And there's a lot of, I want to say it's worth looking or reading through the fine print when you're signing up for a credit card, because there's a lot of these gotchas that can come back and bite you. Also, there's a lot of things that can work to your advantage that most people don't take advantage of. Like some credit cards have things like, if your car breaks down, you can get a free auto club
CAA
help
or something like that.
Yeah, you can get discounts at hotels. You can get this and that, and we don't even know that that's the case and never take advantage of it. Yet they plaster that all over their marketing when you're trying to get the credit card, right?
Of course.
We read that and go, oh, that's awesome. We'll take that credit card, never use it.
Or they do money back, annual money back kind of thing.
Like a cashback.
Cashback, yep.
Yeah, those ones
Or reward points.
are fantastic. Reward points. So we have a credit card that does cashback, which is fantastic.
Yes.
And which is why, by the way, that's why we use our credit card for every purchase we can, because of that cashback option. We use it for groceries, restaurant, whatever. Because we know on the 10th and 25th of the month, we're paying down the full amount of the credit card. But any money that goes through the credit card, we get cash back. That's like 1 or 1.5% of all that money that goes through there. They return to us as a gift once a year. That's a great reward, in my opinion. But there's other cards that do air miles or, scene points. If you're in Canada anyway, I don't know if that's anywhere else, but scene points allow you to go see movies at Cineplex.
Yeah, I think when we got the credit card, we had the option to use scene or money back. And we chose money back because we thought we don't know how often we're actually going to go to the theater. So may as well use the money back.
Yeah, exactly. Now, in terms of credit card, what's the right number of credit cards to have?
1. 2 if it's necessary.
Yeah, you might need 2.
Maybe 3.
I can't think of a scenario where you might need 3, but I'm sure there are scenarios out there.
Yeah.
But you don't want to open up your wallet and see a whole slew of credit cards, especially those department store ones. You don't need them. If you have them, cancel them. Call up and cancel them, because all department stores all accept regular credit cards as well. The only weird one is Costco.
Yeah.
They only accept MasterCard.
Costco, MasterCard.
Come on, Costco, get with the game. You start accepting Visa, please. You'll make our lives a bit better.
Thank you very much.
Yeah. So 1 to 2 credit cards is about the right number. If you have more than that, maybe it's time to revisit why do you have these things. I think we're going to talk about some reasons about, how to know you have too much debt in a future podcast. But if you have more than one credit card, that might be a good sign that there's something wrong there. So,
Yes.
yeah, be wary of low interest introductory rates for credit cards when you're getting a new one. Only have one or two. You don't need those department store credit cards that have a super high interest rate all the time. And
I remember something early on when we first got married. We spoke with our financial advisor. I remember her talking about negotiating costs in your life, including the credit cards, that there's probably some negotiations you can make that to get a lower interest rate or some fees waived, different things like that. And
yeah, some
enjoy the
credit
benefits.
cards have an annual fee. You can almost certainly get that waived, especially if you pay your credit card regularly. You can just call the credit card and say, I would like to have that waived. And if they won't do it, then just find one that does, because there's a lot of them that don't have annual credit card, like annual fees.
Yeah.
I think the only fee we have is because we have a business one, and you have a secondary card,
That's why.
on the account, and they charge for that secondary card.
Yeah.
But they don't charge for the primary one. And if you're just one person, then
That works.
there is only one card to worry about.
Maybe that's something for us to investigate. See if they'll waive the secondary card.
Maybe.
We'll have to look into that.
They're less likely to waive fees for businesses than personal. But it doesn't hurt to ask.
You can ask.
Right? Never hurts to ask. Okay. Recommendations.
Avoid debt in the first place.
The best debt is no debt. Avoid it at all costs. Except for good debt, but still avoid it, for sure. Understand the difference between good debt and bad debt. Try to avoid bad debt whenever humanly possible. If you have to get good debt for good things, like good debt, then you can make that happen. But again, be wary about it, and just know what you're getting yourself into.
And make sure it's to your advantage.
Yeah, for sure. And finally, use credit cards wisely. We've talked about a number of ways to do that. And of course, there's things that we haven't had time to get into, but
Knowing your limits.
just be aware of what's going on. Stay within your limits. Make sure you have a budget in place, and use your credit card to help that budget function. If your credit card is throwing things off, then it's time to revisit what you're doing and make the right corrective actions.
Sounds like a plan.
Yeah, that's debt and credit cards. Happy budgeting.
Happy budgeting.
I can pay cash, I can pay check, I can pay wire transfer, I can pay gift card, I can pay credit, I can pay anything you like. I can pay cash, I can pay check, I can pay wire transfer, I can pay gift card, I can pay credit.